You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
All right, everybody, that music means it's time once again for Options Playbook Radio, the program here on the old Options Insider Radio Network, where we break down this sometimes scary, impenetrable world of options into offensive and defensive plays that you can use in your own portfolio. Maybe you got a little bit of offense, you want to go have a little bit of speculation, a little bit of income, maybe you want to play a little defense, you want to protect your gains you've already made. Whatever you're interested in, got you covered here on the old Options Playbook Radio. My name is Mark Longo, and you might be saying to yourself, hey, wait a minute, that's not the usual guy who's usually on this show, and you're right. So let me toss you to the usual, aforementioned usual guy, Mr. Brian Overby, the senior options analyst and kind of just the options guy over there at Ally Invest. Brian, welcome back to your own program one last time here in 2017, sir.
Excellent. Thank you so much, Mark. I think going into the new year, it's always a great time to get together and try to address as many of the listeners' questions that we received in 2017. And we got a lot of great ones out there that have came in all over the last couple of weeks in the month of December. So I think it's time to huddle up.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via questions@theoptionsinsider.com, twitter.com/options, facebook.com/theoptionsinsider, or via the Trader Network at tradeking.com.
All right, everybody, welcome to the huddle. Like the man said, this is the portion of the show where Brian and I huddle up, attempt to answer as many of your questions as we possibly can in the short span of the show. Sometimes Brian and I think maybe we should just sit down for like an hour or two and just answer all your questions. Maybe one day we will do that. For now, we squeeze them in to the usual format. We got a lot to squeeze, so let's get squeezing. Let's start off here. Taj Penaso, if I'm butchering that, I apologize. But he's got the same question on the brain just about everybody has these days. But I'm sure you're probably getting this over there, trading a lot these days too. Everyone's asking, of course, we're all living effectively in a post-Bitcoin, post-crypto world. We've launched a couple of new products now. SIBO and CME have both launched futures just in the last couple of weeks. Taj following up on those saying, hi, will there be options for Bitcoin once the futures are traded or just the futures until there are tradable ETFs available? Thanks. Well, Brian, there's a lot to unpack here. In fact, this guy's question a little bit more timely than perhaps he or even you and I realized when we were starting the show today. There's a lot to get to. It's a couple of questions we've actually been asking you guys on our network and on our Twitter as well, which kind of dovetails with what Taj is asking here. Because everyone's asking us, we have no insight. Maybe Brian does, but they haven't really announced anything yet. So we asked you guys, when do you think, let's assume we're going to see options sometime next year. When do you think that will happen? We gave you 4 choices: Q1, Q2, Q3, or Q4. I won't cheat, Brian, and read the results yet. I'll let you kind of give your thoughts on this. And then mentioning the timely aspect of this question, Brian, Taj also asks until there are tradable ETFs available. Well, there weren't any, and there still aren't, But this morning, there was a new entry to the fray. Our friends over there at ICE deciding they want to get in on the Bitcoin party, announcing a ETF coming sometime soon. Once it gets SEC approval, that could be a while. And they're going to list that ETF on the futures that are already listed by SIBO and CME. So I'm sure both those firms will love that immensely. So we asked you guys if you're interested in that too. So a lot to unpack here. But Brian, we'll start. Obviously, you're getting asked this question probably all the time as well. What are your thoughts on just the kind of crypto explosion that's going on right now, particularly the interest in Bitcoin derivatives? And then do you have any particular insight or maybe a gut feeling as to when you think we'll see Bitcoin options next year?
Well, the gut feeling is really all that I have, in that it's amazing how much news that you're hearing. I don't think you can watch any of the major news programs without hearing Bitcoin within every 15-minute segment. So I do think that it's going to be sooner than later that they're going to find a way to do options on it, and especially because of the technology that's out there. It's not that big of a deal to add a new product as it used to be. It used to seem like it was much harder to the exchanges had to think about it much more because of the limitations of the technology. Now they just can go on out, and the hardest thing for them to do is to get the regulatory approval. So with all that being said, I guess my gut, and it's just purely a gut reaction, would be that it could get done by Q2, just because of all the press that it's getting. It's not that hard for the exchanges to add it. The biggest thing would be the regulatory process. So I'm not quite sure where the response is from all the listeners out on the website, but what are they saying?
Yeah, I'm with you, Brian. I kind of have the same gut feeling. I think Q2 is reasonable. I think they'd love to have it Q1, but we all know that could take a little bit longer with the options than maybe they initially planned. So I think Q2 is a reasonable estimate. And so far, Brian, I think our listeners, maybe they have a little bit of a recency bias. Maybe they just want it now. But 43% saying Q1, Brian. So they're optimistic. They're more optimistic than 25% saying Q2. So a nice 68% saying we'll see it in the first half of the year next year. And then the rest kind of trailing off throughout the year. Interesting corollary, Brian, as we were discussing before we started the show, our friends ICE launching this new Bitcoin ETF on the futures, which for maybe a lot of our listeners, they don't like futures. So maybe the one thing holding them off of that Bitcoin future was the word future. So maybe this ETF is more attractive. So we asked you guys just a few minutes ago, right before we started recording the show, already the votes pouring in. It's only been about 5 minutes or 10 minutes. But we asked you guys, are you excited by this new Bitcoin ETF? It's pretty easy. Are you interested in trading it? Yes, no. You prefer the futures, or are you starting to say this is just getting too crazy for you? Mr. Overby, what are you feeling on this one, sir?
Well, I mean, in general, I'm saying too crazy. One of the things about an ETF is, a lot of people forget about fees, that ETFs still have a fee that is charged. And some of I just think right away my mind goes to a lot of the VIX products that were out there and all the weird things that happened inside the VIX products. I would definitely not be the first one that would want to jump in and trade this ETF by any means. I think it's going to need to figure out how it's going to work, what's going to happen, where the fees are at. But obviously there's going to be some people that will, especially on the retail side. But it's a little bit, for my risk tolerance, I'm not in. And my response to your polling question would be, it's too much.
Yeah, I'm on board with that. This is getting crazy. You got to love the exchanges just waiting for other exchanges to list products, and then we're going to list an ETF on your products. Just winning friends and influencing people all over the place. Actually, Brian, I think our listeners, they're just caught up in the frenzy. 44% saying yes, they're interested in this. So there you go. 28% saying no. 28%, easy for me to say, saying no. Nobody saying they prefer the futures, which is interesting, maybe a little scary for those product owners. And 28% in your and my camp, Brian, saying this is getting crazy. Yeah, I think it is getting crazy. So maybe with that, that's our cue to segue into some more questions. This is right up your alley, Brian. You love this one. This comes from Penguin, El Penguin. So maybe a Batman villain writing into the show. I have a question for the Option Playbook. I'm a new options trader, and I want to buy a leap call. It's a long-term call, listeners, of course, because it looks like the stock is going to go up in the next 12 months, but I don't want to commit yet. I also want to generate income while I hold that position. What are your thoughts on selling the call while I have the leap? Also, this stock has an attractive dividend that I'd like to capture. Is this even possible? Interested in your thoughts, thanks. I was thinking about buying a deep in the money call for the leap, and then depending on where the stock is trading at the time, selling closer to the money. Brian, this sounds like a strategy, an infamously named strategy you may have mentioned on the show here once or twice. I think you call it the peach pit. What's your name for it again, sir?
No, it's called the fig leaf.
Ah, yes, the fig leaf.
And the fig leaf means that you are buying a leaps call. Penguin is calling it a leap, but leap is an acronym. So it's long-term and anticipation security. A lot of people forget and leave out the S on the very end of it. So you're buying the leaps call as a substitute for the stock. So you're buying something with some decent delta on it and then selling near-term calls against it. Now, it's kind of interesting. This is a general progression for covered call writers in that they buy stocks and they sell calls against it. They start getting more and more in the options. And then eventually they say to themselves, why do I want to buy the stock at all? Why don't I just buy a surrogate for the stock? And the best surrogates that you can find out there are leaps calls that got a fairly decent delta, 80 or higher. And yeah, so I'd be willing to bet that Penguin has sold a covered call at one point in time in his life on an actual stock that he's owned, and this is very possible to do it. Now, when you got some great questions, and this question by itself you could do an hour just on the pricing of option contracts, because L Penguin brings in the concept of buying a leap and the fact that you are not entitled to a dividend. So if the stock pays a big dividend, what's important to note is that the options marketplace knows about that dividend, right? Because it's usually announced and they have some idea what the dividend is going to be after most oftenly once a quarter or sometimes a yearly dividend, but they know what that dividend is going to be and the amount of it. So when we look at that dividend, that gets priced into the call option. So on the leap side of it, if you're buying an in-the-money call with a stock that pays a dividend, you usually get a break on the price of that in-the-money call. In other words, the dividend is baked into the price of the option contract. So, in theory, you are capturing the dividend by the fact that you're not paying as much for the call on the initial purchase of it. Okay, so there was a lot to unpack there. Now, with that being said, that can hurt the option contracts that you are selling. Because if you're selling an option and there's a dividend within that expiration of this out-of-the-money option contract, the same is also true in that those options won't receive as much premium as they would have if there was no dividend. Now, lastly, and my third and final point, though, is that's not any different than if the stock had a big dividend, right? You're still not going to receive as much premium because the stock is paying a dividend and you own the stock. So, moral to the story. Yes, everything that you want to do, L Penguin, you can do. You're kind of getting the dividend because you're paying a little less for the leap than you should have because of the dividend. And keep in mind that a high dividend paying stock, the actual out of the money calls that you are selling will have less value for that same reason that the leap is valued at a lower price. Now, the biggest thing about the fig leaf, and the reason why we call it the fig leaf is going to be my last and final point, is that you're kind of covered, right? And that's where Fig Leaf came from. It actually came out of our trader network community back in the day when we used to be Trade King. And it's kind of covered because you don't own the stock. And if you get assigned on that call option, it's not as simple as, oh, well, go ahead and take my stock. You have to do something, right? You're going to have to either exercise your leap option and get the stock that way, or you can go out and sell your leap option and go out and buy the stock with using the proceeds, or you can just try to avoid assignment by rolling that option position. So if you're going to do this, and this is your first realm, jumping off the covered call arena, or I should say covered call mountain, into the Fig Leaf arena, well, if you're going to do that, make sure you have a plan if you get assigned on that option contract. Either you're going to try to avoid it, or what you would do if, for instance, you might get assigned early because of the big dividend. So I like this strategy. It was the reason why we came up with a name for it, is because it's always been a very popular strategy throughout the years, and nobody ever gave it a name. And so we thought the Fig Leaf was appropriate.
I like the Peach Pit, a.k.a. the Fig Leaf, a.k.a. the synthetic covered call. We had a fun debate about this on a recent show about what we should call this sort of thing. But so I know that's usually the stumbling block for this strategy, which is, of course, these stocks like L Penguin mentions that pay a juicy dividend. That usually trips people up. They think they get the dividend. They don't. They get upset. And then, of course, it messes with the premiums as a result. Do you, therefore, when you're recommending this to newcomers for the first time, do you typically recommend maybe they pick a nice, quiet, non or very low dividend paying stock to start, just for just to kind of avoid all the hassle you kind of just mentioned?
I think that's a safe bet. I think that you're better to stay with something that you understand. Look at the premium, learn about dividends. There's a nice pricing section inside the Options Playbook in the beginner section that talks about the fact that, what dividends do to both puts and calls, because the stock's going down by the price of the dividend. And if you want to avoid that scenario, then definitely stick in stocks that don't pay this big type of dividend. And one of the things that a lot of people forget about, and which probably where we run into the most problems with dividends and underlyings, is the S&P 500 index, the SPYs, the ETFs, that pays a dividend, and a lot of people just get blindsided by it. That happens a ton over here at Ally Invest.
Yeah, I don't even have to check my calendar. Whenever I start seeing the emails pouring in saying, what happened to my calls in SPY? I don't have to look at, okay, it's SPY dividend time. Because it's such a, you're right, it's such a regular thing. Everyone, it's like they have such short-term memories. Everyone forgets every quarter SPY's got the dividend, and they just, same questions come in every quarter about all of that. But you're right, this is, the Fig Leaf, that type of strategy is useful, but if it's got a dividend to it, it makes it a little bit, a little more challenging, a little bit more involved with that. And so if you're not up for that challenge, maybe a nice, very low dividend or no dividend paying stock might be a good way to go. Otherwise, you're dealing with everything we talk about, X dates, lower premiums. Maybe you got to swap the calls for the stock around the dividend to capture the dividend, then go back to the leap. It's a rigmarole. So if you want to avoid that, maybe you stay with some low. That's why you do the Fig Leaf to begin with. You're generating your own dividend stream. So bear that in mind. All right, we got time here. We could do a quick one here. Let's do this one, Brian. VLL98, Vil98 maybe. Saying, what happens to my options if the company declares bankruptcy? Can I still exercise my calls and buy the stock at the strike price? This is he gets points for no one ever asking this question before. I've never seen this before. So effectively what Vil98 is asking is, can I still buy a worthless stock for the strike price of my options? So let's say his options are for the 100 strike and the stock's gone to zero because it's bankrupt. Can I still buy it for 100? Yeah, you don't even need options to do this if you want VLL. If you go out there and say, I'm willing to buy this worthless stock for any price above zero, I'm guessing you'll find a few takers for that. But that's obviously silly. What I'm getting to VLLs is there's no real rational reason why you'd want to do that. Maybe the flip side of the script is maybe more what you were thinking of, which is, of course, your puts. What happens if maybe you're long puts in this scenario? In that case, you're a happy camper, because guess what? The stock goes to zero, but guess what you have in your hand? You have a contract that says you can sell that stock at that price anytime during the lifespan of that option. So you can go ahead and do just that. And in fact, whenever these kind of things happen, the best place to go is the OCC, the Options Clearing Corp, because they will usually issue some sort of circular about this specific corporate event. So to search for your ticker, search for OCC, and generally you'll find a nice circular explaining all this, how the stock's going to, sometimes it's not just going to bankruptcy, it could be a corporate action, a takeover, a merger, all the weird, funky dividends, all these things. There will be some sort of circular explaining how the options, if there's a settlement price, where they're going to settle out to, or if it's just zero, all that stuff will be determined for you. So you can look at it and say, okay, here's the settlement price, all the puts are in the money here, all the calls are in the money here, everything else is worthless, and they kind of will do a lot of that for you. You can even call them. They have a number, 888 options, I believe, or something along this, a little bit longer than that, obviously. I'll have to look up what the number is, but it's something along those lines. Just go to optionseducation.org, and they have it all there. Brian, you must get questions about bankruptcy and options all the time. Anything you want to add? I'm guessing maybe you'd be in line to sell this guy some stock if he's willing to buy it for more than zero.
Yeah, I'm in line, and I actually expected the question to be worded wrong. Like usually I'll see a question like this and it says, can I still exercise my calls and sell the stock? But implying that they're talking about puts. But the answer is, yeah, you can, and it's usually worded the other way around. Yeah, you can exercise calls and buy stock. They have to deliver the stock to you as long as the option is not expired. Now, a tough thing is what if the stock is halted and you're approaching the expiration date? That's where it could get a little tricky. Let's make it a little bit more realistic in that the stocks maybe you got a $2 call or something, because those actually exist in this day and age, which I don't really know why, but they do. And you wanted, for some reason the stock is halted. People are talking about bankruptcy. What do I do? This could be one scenario where you may just exercise your call and hope that the news is wrong. And that's a really gutsy play, but that's about the only one that I could ever come up with why you would want to do this scenario. But if you did do that, when you exercise, the exchange would have to come up to the stock and actually sell it to you. So it is plausible to do it. But yeah, that's the first time I've had to answer that question, I think. Mark, I think I'm in your realm.
Bonus points for VLL98. Thinking of someone no one else thought of. Maybe no one else wants to do, but that doesn't mean the thought process behind it isn't worth examining. And you're right, Brian. It have to be, in order for this scenario to make any sense, the stock would have to be A, cheap. You don't want to do it on an expensive one. And then B, it's got to be some crazy amount of uncertainty. So maybe, I'll take a flyer and stock's going to zero or maybe to 50. Who knows? So I'll take a flyer. I'll buy mine for whatever, that $2 strike price. And who knows? Maybe I hit a lottery ticket, or maybe it's gone. But that's the only that's the only way I can even see that this would make any sense. Good questions, though, from everybody. We got to keep rolling, though. Unfortunately, that's all the time we have here on the old Options Playbook Radio. But before we go, Brian, if people are listening to us here for the final time in 2017, first off, I want to thank you all for listening. We love having you guys tune in every week, sending us such great questions. And Brian, if people are interested in becoming a part of the show and they want to send in their own questions or comments, like VLL and L Penguin and everybody else here on the show today, where should they go? What should they do?
Well, definitely. You can always email me directly if you'd like to. I have a email address set up just for the show. It's called theoptionsguy@invest.ally.com. So it's the options with an S guy at invest.ally.com. And it's been a great year, Mark. I thank everybody over at Options Insider Radio for all the production and all the time that's been put into the show, and the listeners, of course. If you weren't listening, it wouldn't be worth doing. So I appreciate all the support we get from our listeners, and I guess see you in the new year. So that's when we'll be back. Thanks for coming, everyone, and hopefully may all the options you bought finish in the money, and all the ones you sold finish out.
The Options Playbook was brought to you by Trade King Group. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to tradeking.com/ODD to review additional risks involved with trading options. Securities offered through TradeKing LLC, member FINRA and SIPC.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.